The Metaverse is the hottest thing on the internet right now. Facebook renaming its parent company to be called Meta to reflect its long-term vision. It's created a lot of hype around the Metaverse and certain stocks. People want to get in early so they don't miss out. For those of you who might be wondering what a Metaverse is, it's essentially a virtual world which will change the way we interact socially. Just yesterday I played Horizon on the Quest 2 and it was fantastic. You can dive into this digital world, you can stand there, see your hands and interact with people from around the world. We even watched a live Billie Eilish concert which was really bizarre but at the same time really cool. With this digital world comes a lot of opportunity, mostly in the way of software to create these worlds, but also in the hardware and tech that would support its development. Before we start, if you could take this opportunity to smash that like button, I will buy you a beer in the virtual world when we meet. Now, when I came to research this guide, I noticed there's a lot of what I would call false promises. And that's for one reason, and that is it's great clickbait. I think saying that companies that are in some cases massively overvalued will 100x is just crazy. And saying get in early is a bit misleading. Yes, we are at the forefront of the metaverse, but saying it's time to get in early, you have kind of missed the recent boat. But it does depend on your investing approach. In the grand scheme of things, we are still early, but that might be in 5 years' time. Are you buying companies because you want profit in the next year, or are you buying companies because you want profit in 5 years' time? In my opinion, a much better approach would be to switch to companies that are going to make profit in the next year, and then when the hype has died down and these companies represent better value, then switch to them then, because you want to be making continual gains, not just hoping that you're going to make profit in 5 years' time. So in this video, I'm going to talk about the 5 best metaverse stocks. I'm also going to mention a couple of honorable mentions, and the last one is going to be one I think everybody needs to be aware of. So make sure you stick around to the end. And then I'm going to let you know how I'm approaching it. Next week, I'll be doing a complete update on my portfolio, which I know has been long awaited. So if you're not already, do subscribe, hit that notification bell, and you'll be notified as soon as I upload. So let's dive straight into stock number 1, and that is Mataport. So Mataport designs, builds and operates 3D environments via its digital twins technology. The basic principle of Mataport is it allows you to take a 3D copy of any real-world space. Currently, thousands of companies in over 150 countries use Mataport's technology, and the company is planning to grow its client base even more in the coming years. The company's products are used by a wide range of companies with a primary focus on the real estate sector. And you've probably already seen this with house tours. You can create a digital environment and walk through that space. So just imagine if that was applied to VR. Mataport has already worked with Facebook to create the world's largest digital library of 3D assets, which is available for academic research. And it's clear to see that Mataport would be the clear partner for Facebook to create these digital environments. Being able to quickly scan your environment and upload it would be game-changing. Else, all of these digital environments would need to be painstakingly recreated in some kind of 3D software. So having this mapping system would really speed things up. If we take a look at Mataport on Genuine Impact, we can see it's had a massive 82% rise in the last 3 months compared to 5% with the S&P 500. We can see its strengths are quality, return and liquidity, while its weaknesses are its stability and its value for money. With Q3 revenue of 27 million and earnings of minus 167 million, it's clear that Mataport is a long way from being profitable, and that speculation and future value is a huge factor in the price. My view on Mataport is that it's definitely a stock for your watch list, but whether or not now is the right time to buy, I'm not too sure. Mataport's growth potential is exciting, but investors need to be aware of the long-term risks as well. Mataport's service is pricier and more complicated than other services, such as Zillow and Qpix with their 3D tour. It could face even more competition over the next 5 years as 3D sensing cameras and LiDAR scanners become standard in most phones. Its cloud servers, which also allow clients to host their 3D tours, could also come under threat if competitors offer a free option. Comparing it to other stocks, it's clearly a great long-term option, but I don't see a huge amount of upside in the next 12 months. But once the dust settles, it could be a really nice stock to pick up. On the high side, it's coming in at $30, on the low side $20, with an average price prediction of $25. The next stock on my list is Nvidia, which is one of my favourite stocks of all time. Nvidia is a pioneer of computer graphics processors. It became the 7th largest US company last Wednesday, surpassing Warren Buffett's Berkshire Hathaway. The company is aggressively expanding its use of chips by focusing on supercomputers, data centers, drug development, and self-driving cars. Facebook, or Meta's plans to pursue the metaverse, are going to benefit Nvidia in the coming years. The company is one of the top providers of graphics processors to Facebook. Nvidia is positioning itself as the best in class for AI and machine learning. This is a great move because many big tech companies are really interested in those sectors. Nearly all of the signals on Genuine Impact show it is in the top sector, with it falling down on value and expected return. But if we look at Nvidia's performance over the past 10 years, we can see they've been crushing the market average. But of course, we can't just go off past performance. But we can see how nicely the earnings per share and the revenue and profit has been climbing. We can see that Nvidia has been beating the analyst predictions for the past 2 years, with 82% of analysts giving it a buy rating. The range for this one's quite wide, with the high end being $400 and the low end being $185. Now, some of you might be aware that Nvidia has run into supply issues. The shortage of graphics cards is expected to last until at least 2023. And this is mostly due to people buying graphics cards to mine Ethereum. You might not be aware of this, but people can buy these graphics cards, make a crypto miner, and then they can generate Ethereum off the back of it. Personally, I was trying to buy a lot of them and I just couldn't. At the time, I was ready to invest about £20,000 into crypto miners, and I couldn't buy them anywhere. In the latest range, they've included a limiter because they want to stop people mining cryptocurrency, so they're trying to put the crypto miners off. As Ethereum moves to Ethereum 2.0, it will no longer be mined, so there's speculation that that will create a huge market for second-hand graphics processors. But at the same time, it's just as likely that they will just move on to mining a different cryptocurrency. The company is richly valued. It has a forward earnings multiple of 75 compared to the industry average, which is 25, which highlights the risks of investing in Nvidia today. I think Nvidia is a good long-term hold and you could see some upside in the next 12 months, but you have to be aware that as of today, it's very highly valued. If you were wondering about this app I'm using, it's actually called Genuine Impact. It's a really nice beginner-friendly app for stock analysis and working out which are good long-term holds, and it's actually only £45 for the year. I've got a link down below that will get you a free 30-day free trial, so do download it, have a look around, and use it to analyse some of your own stocks and see if you've bought some good options. The third on my list, which I think is really fascinating, is Roblox. For those of you who don't know, Roblox is an online world, essentially a kind of online game. I would class it as a kid's game, really, because the characters look like Lego characters, and I think that's what any adult will just see on the surface. It's moving away from that, but that is what I would say it is at its core. Roblox already exists as a huge online world, and it has its own metaverse, so it could be huge competition to Facebook, or they could embrace it. It has a studio which you can use to create anything you can imagine within Roblox, which is quite amazing. And people have actually made a fortune making these Roblox games. What I really love about Roblox is it has programs to encourage kids to start learning to code. And being somewhat of a coder myself from my web design background, I think that's so cool. Coding is such a good skill that has so many applications and it can earn you such a good wage. And learning coding through Roblox will bring more kids into coding, and they will probably build the metaverse of the future. It's got a really good partnership as well with Project Lead the Way, which is focused on bringing coding to as many kids as possible. You might think, how does Roblox make money? Well, it makes money through its in-game currency, which is called Robux, as well as advertising deals, licensing agreements, and royalties. In terms of price predictions, on the high end we see it at $123, and on the lower end it's at $82. Roblox prices have gone crazy this month, with over a 44% gain in 3 months. The sentiments for this company are harder to judge because it is a new company and it's only had its IPO on March 10th. The Roblox education division is aiming to support 100 million students by 2030, which would be an amazing goal. When I thought of Roblox, my main concern a few years ago was, isn't it just going to fizzle out when everybody gets bored of it? Well, personally, I'm actually really surprised how popular Minecraft still is. I thought that phase would have come and gone, but it's still as popular as ever today. But I think the way Roblox operates in creating this online metaverse and allowing people to create whatever they want within there, they're really securing the sell for the future. Even if the metaverse failed, which I don't think it would, I think they've got a huge opportunity in teaching kids to code. Now in terms of cons, one of the most appealing things when Roblox went for its IPO was that it had a 50% free cash flow margin. The fact that for every $1 generated, Roblox made 50 cents is quite mind-blowing. But as it's just reported in Q3 this year, it's got a revenue of $509 million with a free cash flow of just $178 million. Now it doesn't take a genius to work out that's not half. In fact, it's dropped to 35%. But make no mistake, Roblox is a money-generating machine. The company is still on track to churn out $650 million in cold hard cash by the end of the year. So in my opinion, Roblox is a fantastic play for the future, but at the moment it is still very expensive. The fourth stock that I want to mention is Unity. Unity is a leading company in the way of 3D content, which can be used for a range of purposes, whether it's gaming, AR or VR. Today, more than half of the world's PC, console and mobile games are made using Unity. And it now has capabilities for internal ads, in-app purchases, multiplayer support, communication services and analytics that are used within the games. It has really good growth within its current business, while the Metaverse will just provide an extra boost. To sum it up comes a quote directly from Unity by Dr. Danny Lange, Senior VP of AI at Unity. Right now, we're just at the cusp of getting to the point where a lot of technologies, a lot of concepts are coming together. At Unity, we're making very significant investments into the concept of digital twins. Digital twins could really be a foundational effort in the metaverse concept. It's the first step where we can interact in a digital world. We can learn from it and impact it before we get into the real world. There are a lot of applications and a lot of opportunities there. Digital twins is this concept of replicating real-world places in the digital space. They're also really focused on augmented reality, loading digital assets into the real world, allowing things like doctors to perform digital surgeries and practice, and also engineers to try things out really easily. Unity stock rallied after they posted really good Q3 results. It's agreed to buy the virtual effects studio called Weta Digital, which will strengthen its ecosystem as well as its non-gaming services. This is a studio that was co-founded by Peter Jackson from Lord of the Rings, and they're acquiring that for a whopping $1.6 billion in cash and stock. Its revenue rose 43% year over year to $286 million, beating estimates by nearly $20 million. It now expects its revenues to rise by 40%, whereas it predicted 35%. In the past year, Unity has outperformed the market with a 76% return in the last year. It beat the consensus on revenue, but not on earnings per share. On genuine impact, out of 16 analysts, 75% gave it a buy rating, 19% a hold and 6% a sell. On tip ranks is where it gets a little bit scary, with the current price being $193, the top estimate was $185, and on the low end it was $158. But although the analysts do see the downside, they're all sticking to a hold rating, with not one of them indicating to sell. This tells me that they're saying not to buy it, not to sell it, but hold it for the long term. But they're not encouraging new people to get involved. It's clear again that Unity are a fantastic play for the metaverse, but at the moment they're very expensive. But one benefit could be, although it's expensive, it's growing faster than the gaming market and it is a market leader. Now there's a couple of companies that I haven't mentioned, and that's because while I think the metaverse is huge for them, I would still class them as an IP play, which is intellectual property. People are saying that Disney is a metaverse company. Disney own or have shares in Marvel, 20th Century Fox, National Geographic, Sky, Hulu, ESPN and GoPro, and it's just continuing to grow, which makes them pretty much the king of entertainment. Facebook or Meta own Messenger, Instagram, Facebook, WhatsApp, and a monster list of other companies, making them the king of social interaction. But they also own Oculus, which could be the whole key to the metaverse. Now, while both of these companies are obviously huge for the metaverse, you might think Meta, well, they should be bought for the metaverse. Actually, I think both of them are really good long-term options, but not for the metaverse. I would buy them both just based on IP. They own so many companies, it's clear that both of these are just going to be huge in the future. But you need to research and work out whether in the next 12 months they're good options. Disney are definitely one of my favourite companies of all time. Now the fifth one I'm going to mention is one you might not have thought of. Now there's a lot of FOMO going around at the moment with the metaverse, fear of missing out. And the truth is, you're probably already invested in the metaverse. Facebook, Disney, Microsoft and Nvidia are already on the S&P 500. Not to mention a load of other tech companies that are all going to benefit from the metaverse. So if you own the S&P 500 or maybe an all-world fund like the Vanguard one through an index fund, you're going to have exposure to the metaverse. So you don't need to panic and think you need to rush off and buy the metaverse now, because you already have exposure and you've probably already benefited from the rise in these companies. So what am I doing? Am I rushing out to buy all these companies with this 100x that's promised to me by the YouTube gods? Well, what I'm doing is I'm watching all of these companies really carefully, because I think they're all fantastic plays for the metaverse that's building and coming as we speak. At the moment, I'm happy with my exposure through the All World Fund, and then in the next big crash or when the hype dies down, I'm going to swoop in and pick up some of these companies when they represent good fair value. Like good old Warren Buffett says, you need to invest for value. And if you can't find value, just stick to the S&P 500. If I had to choose between these, I would pick Nvidia or Disney, but I think at the moment there's far better options. So I hope this has been helpful and gives you a more realistic view on the state of the Metaverse stocks. Next week, I'll be posting my portfolio update, so if you haven't already, make sure you subscribe. And I'll leave my last update right here so you can take a look if you missed it. As always guys, do your own research, don't just listen to the hype, and let's make those gains. 'Cause I just wanna see the light.